Hello and welcome to today's Fat Tail Daily video. Today I'm joined by Nick Hubble. Welcome, Nick.
Yeah, good to be back, Woody.
Yeah, it was only on Friday we had a chat, but a lot's happened since then. Today's piece, you've made a really big prediction about the upcoming election. Well, I say upcoming, it's May 2025, but you made some key points in there. Before I get to that, though, there's been some big news overnight. Nvidia, the big tech company, had a pretty dramatic fall. The Nasdaq's down. The oil price is also down, but it comes as a reaction to the Justice Department's investigation on the power that Nvidia as a tech company is welding. Have you got any comments for readers on that before we dig into today's piece?
Yeah, that particular piece of news sort of pushed Nvidia down even more after market trading. So there's an additional crash that's not yet fully showing up on everyone's screens. But I think the Nvidia story is almost a sideshow because it's so overvalued that it's largely just a bubble that's popped and is continuing to deflate. So I don't think we can read too much into that. The oil price is quite important, and action in the bond market is quite important as well. I think markets are starting to price in either a recession or a significant slowdown in the US. And what makes this really important is that historically speaking, when we got bad economic news out of the US and a couple of other places as well, stocks often rallied. Things actually improved in financial markets. The reason why being this tradition now of bad news is good news. So central bankers will be able to cut interest rates and support financial markets if the economy is performing badly. Recently, we've had the opposite situation where inflation was so high that central banks were unable to support financial markets. So bad news was bad news. And it seems like the fact that we haven't transitioned back to bad news is good news is quite important. It suggests that the central banks are not going to try and save financial markets, even though the economy is turning down. And that's going to be an important trend determinant over the next few months, potentially even years, as the American economy starts to perform badly and potentially even goes into recession. It's quite a surprise to me because interest rates are so high now that they can be cut very significantly.
So
So I would
high.
have thought that financial markets would actually react to bad economic news in a positive way by saying, well, now the interest rates can finally be cut so much that it's going to be good news for stocks, and for bonds as well. So the fact that we haven't gone back to that old way of bad news is good news is really important and quite a surprise to me.
Any thoughts on the energy side of things? Because the oil price also had a bit of a fall.
Yeah, there's a couple of odd things going on in the energy markets, especially in Europe, where gas demand has been unusually low. It's all about China as well, being a huge importer of oil. And then the question for the US is if the economy slows, obviously that cuts demand as well. So that there's so many different things going on in energy markets at the same time. It's very difficult to get a handle on which particular thing is moving the oil and the gas price. But the point that we do know is that energy markets are confirming what the bond market news is, what the PMI news is, which has been very bad manufacturing data from the US. It's confirming all of these, all the different data points are aligning towards a slowdown, jobs numbers as well in the US. All the different data points are aligning to the same narrative of a significant economic slowdown in the US. So I think investors need to be changing their portfolios to a more defensive position, especially if they're exposed to the US.
Cool. Thanks, Nick. So let's move on to today's Fat Tail Daily piece. Now, you're looking ahead to the next election in Australia. You're looking quite far ahead, but that's the nature of what we do. Fat Tail Investment Research. We're all about trying to figure out where the markets are headed before to give our readers an insight into where things might be headed. So you've made a bit of a prediction. Do you want to start with that prediction?
Yeah, the short version is that I think the coalition has a much better chance of winning the upcoming election than markets are pricing in, betting markets. And that's not financial advice, by the way, to anyone listening and watching. But the reason why is the interesting bit here. I've noticed over the last few months that Peter Dutton, the opposition leader and former immigration minister, has made immigration a centerpiece of his election campaign. And what someone who follows global politics might notice is that this has been a very successful strategy over the last few years, to say the least. It's led basically anyone who's taken on the position of cutting immigration to gain significantly, in some cases, to get into government. And often that position was taken by political parties and their leaders who were, until recently, fringe or extreme or beyond the pale, or however you want to put it. So right across Europe, we've had example after example and election after election at state levels as well as national levels, where the party that was anti-immigration did unusually well or surprisingly well, and in some cases got into power. And my point is that this is going to play out in Australia as well in the coming election, and that's why Peter Dutton has made that change. I think it could work, or it's significantly more likely to work than betting markets and the polls and the probabilities are suggesting. And I think that this shift in immigration policy in Australia would also have huge implications for investors and asset markets, as it has had already in many places, especially in Europe.
You also suggest that governments are pursuing high immigration despite political unpopularity, right? So can you elaborate on what you think these governments know that we don't about the necessity of immigration?
Yeah, there's
And
been
we'll
sort
come
of
to
a
the investment
mystery.
implications very soon, by the way. Sorry, I should preface that.
Yeah, the mystery of politics, especially in Europe, but also in places like Canada, has been why the mainstream parties have refused to cut or crack down on immigration. We're talking absolute numbers here, not illegal and all those sorts of
Yeah.
issues. It's an obvious election winner, right? Consistently, the party that's come out against immigration has gained significantly or won the elections. So why aren't the mainstream parties pursuing that policy? It's gotten to the point where it seems like politicians care more about immigration than their own career, which is downright bizarre. The whole point of politics is you try and get elected by giving voters what they want, and so going against what they want is obviously a bad idea. And yet it's been happening in country after country. The mainstream centre political parties refuse to crack down on immigration. The UK being an especially interesting example here, because the previous government, promised to crack down on inflation for decades, but never did it. In fact, immigration soared out of control, despite the promises to crack down on it. So that's why they lost the election so badly recently. But the question that's emerged from this is why? Why would politicians be willing to sacrifice their career in order to pursue extremely high immigration rates? And this article that I've written sort of digs into that and explores what the implications of it are. And what I've really focused on is the two issues of GDP per capita and, of course, the idea of government debt. And my point is that Australia is quite unique on both of those. We have unique features of our national debt, which comparative to the US and Europe is very low, the debt to GDP ratio. And also we're able to adjust our immigration policy quite effectively, whereas a lot of European countries and America seem to really struggle to do that very well. And this has set us up, I argue, to outperform economically, socially, politically, sort of stability compared to other countries. And I think that's going to mean Australian asset prices perform well as well.
Can you just dig into that a little bit more? Because you do highlight a paradox of Australia experiences weakest GDP growth since the early 1990s, alongside the strongest population growth in 70 years. So how do you think this disconnect between overall GDP and per capita GDP will affect Australia's economic dynamics in the coming years?
Yeah, so I think governments have been allowing so much immigration in order to keep GDP growing. Australians will remember when Kevin Rudd was in charge, they had this immigration boom, and it allowed us to avoid a recession after the 2008 financial crisis. Famously, Australia didn't have a recession. Well, that was because we allowed so many people to come in, so the economy grew overall. But on a per capita basis, meaning per person basis, we actually did have a recession. So we allowed so many people in that each person's slice of the pie, that is GDP, shrank. And what politicians around the world are doing is making that trade-off consciously. They're prioritizing overall GDP over GDP per capita and political and social cohesion using immigration. That's their policy tool. And the reason they're doing that is to try and keep the national debt affordable. Because while we care about how big our slice of the pie is, that's GDP per capita, the national debt doesn't care about that. The national debt cares about how big GDP overall is. So what governments are doing and politicians are doing is saying, we have to grow the economy in order to keep our debt, our national debt, affordable. And that's why they're so focused on immigration instead of GDP per capita. And Australia is one of the few countries in the world that can afford to say, look, this immigration level is socially, politically, going to cause too much trouble as it is in Europe already.
Well, I was going to say, it's like you say in your piece. If you listen to the mainstream media, the driver of all this stuff is that everyone's suddenly become racist en masse.
Yeah, that's what we've been hearing about in the European media. They just don't seem to understand that this is the response to the immigration rates that Europe has experienced. And of course, Australia is experiencing that to a lesser extent, but I think it might still be the deciding factor in the upcoming elections, especially if things get really out of control in Europe, as I would say they are. I don't know how much the Australian media is covering it because I follow the local media instead. But if immigration is associated with political chaos and some wacky and wild immigration, just wacky and wild economic policy from anti-immigrant parties, which I think is coming in Europe, then Australians and Australian voters might wake up to what's going on in Australia and demand that we stop focusing on GDP in aggregate by having too much immigration and start thinking about, well, how can we grow everybody's slice of the pie instead?
So given all these things, Nick, given the economic trends that you've outlined regarding immigration and GDP per capita, let's just finish on the investment implications for Australian investors then. Are there, you mentioned this is all going to be good for, or potentially bullish for Australian assets, but are there like any particular sectors or types of companies that might benefit or suffer from these shifts in policy or in investor or voter preference?
Yeah, I think any companies exposed to Europe or the European economy are going to suffer disproportionately. Probably Japan as well. So maybe our gas exporters, some of our energy exporters. I'd be worried about them because I think radical change is coming to populations and therefore overall GDP rates. I think the companies that are exposed to Australia will do quite well, especially if they're not too reliant on growth, on continual growth of the economy, of the profit margins, so on and so forth. Also, companies that sort of sustained a high level of profitability for a very long period of time. A lot of family-run businesses or businesses with a family history would be the place to keep your money because they've proven the need to not constantly grow or be part of the economic growth side of things. I would expect property to struggle given that the focus on immigration rates in order to keep the economy growing would fall in this scenario that I'm talking about. But I think that the biggest issue is that our political and financial system would be comparatively more stable. So it's a comparative argument, right? It's saying, you've got to invest your money somewhere because of inflation. You've got the choice of all these different countries around the world or Australia. And I'm saying, you should disproportionately be owning Aussie assets rather than things overseas because the politics and the geopolitical risk and the risk of bizarre economic policies coming about, especially in Europe, is now growing really, really high. And Australia is one of the few countries that can afford to avoid that.
Interesting. We'll leave it there, mate. Thanks for your time. That's very interesting. If you would like to check out Nick's article on all this, head over to the Fat Tail Daily website at daily.fattail.com.au. We'll provide a link below. Check it out. Leave a comment. Tell us what you think. And Nick, thank you for your time. We'll chat very soon.
Yeah, see you next week.